10-year note yields make a big move higher following today's stronger than expected non-farm payroll number. Likewise, we were trading around 194 on Wednesday. We come in today after payrolls and things really pushed higher, up north of 204. So what was a big single day move, a big one that we've seen in 10-year, on an outright basis, 204 still remains very stubbornly low as the market now looks to reprice some of that aggressive Fed cuts that were coming in the second half of 2019. So at this point, the market may be taking back a 50 basis point cut at the July meeting. They're not really sure. There's still a 25 basis point cut priced in. However, we get the chair next week and he may clarify some of that, but the jobs number really makes it difficult. It will be a thorn in the side of the Fed if they need to start cutting rates with the job market continuing to expand. And at this point, unemployment remains at near historic lows, and other economic data has been very mixed. So at this point, you're looking at global growth, you're looking at trade deals, you're looking at what's happening over in Europe and the Middle East. So the Fed may be looking outside of the U.S. if this cut is to come to fruition. But at this point, it looks like 25 may be all that the market can ask for or hope for, given the fact that the job market remains strong. And if you look at market volatility in the 10-year, despite the fact that we saw the underlying move against the trend, which would be the definition of higher volatility, it didn't happen. Volatility has actually sunk even lower, lowest we've seen in a long time. And at this point, it seems the market feels comfortable with these low yields that were put in earlier this week, now maybe getting back north of 2%, possibly seeing the Fed ease back off the easing train, which would have yields creep even higher and back into the old range, and a range that seems old from a long time ago, but something closer to maybe 2.25, which seems out of reach now. But if the Fed isn't going to be cutting rates at all in the near term, 10-year note yields have some upside to them. And if you want to talk about what's happening next week, it's really going to be all about the Fed chair. He's going to be speaking to Congress on the 10th and the 11th, and at this point, his testimony will probably be what sets up what happens at July FOMC on the 31st. And I think at this point, he has a lot of explaining to do if the Fed's going to be aggressively cutting, if they're going to be moderately cutting, why still are they cutting based on what we saw today with the jobs numbers. And likewise, I think what is the outlook and what is the guidance for the rest of the year? Because at this point, I think the market wants more aggressive cuts and the Fed wants less aggressive cuts. And typically the Fed has to gravitate towards the market, but we may be seeing something a little different here. And if that's the case, you can expect higher Treasury yields coming. You can expect, certainly you can expect equity markets to back off as eases help the equity markets. And as we saw in gold today, it was down about 20 bucks. Everything seems to be trading off the dollar and Fed expectations. So at this point, it seems very, very much that the 10-year note yield, we're sitting very precariously at 2%. We broke through very briefly, and now we're back above. Could be above for quite some time, but the chairman should give us clarity by the middle of next week.